Welcome back to another episode of JRNY TV. My name is Nick, and here at JRNY TV, we make the complex world of digital finance not so complex, regardless of your experience. Today, we are diving deep into an unprecedented financial development that's quietly unfolding in the United States right now. One that could dramatically reshape America's economic future, global crypto markets, and even international finance itself. We're talking about the United States Sovereign Wealth Fund, an ambitious initiative introduced under President Donald Trump, designed to strategically position America at the forefront of global finance, utilizing a groundbreaking combination of public funds, digital assets, and cutting-edge investments. Now, for decades, sovereign wealth funds have primarily been associated with resource-rich nations like Norway, Saudi Arabia, and the UAE, countries using vast reserves from oil revenues or commodity wealth to invest in global markets strategically. Surprisingly, the US, despite its immense economic power, never fully embraced this concept until now. Trump's recent move to create a US sovereign wealth fund not only represents a historical milestone, but also signals America's willingness to harness crypto and digital assets as strategic national resources. In this JRNY TV special, we're diving deep into what exactly this groundbreaking US sovereign wealth fund entails and how it could revolutionize America's economic influence, as well as why its potential investment in crypto, specifically Bitcoin, has investors and financial experts everywhere buzzing with excitement. Whether this fund becomes a global financial game changer, or maybe it raises significant concerns about transparency and governmental involvement, one thing is clear: its implications for crypto, financial markets, and American economic power are enormous. So buckle up, because today's journey will reveal exactly why America's entrance into sovereign wealth could in fact change crypto forever. What is that sovereign wealth fund, and why does America want one? Well, first, let's quickly break down what a sovereign wealth fund actually is and why the US suddenly sees it as a strategic financial necessity. Simply put, a sovereign wealth fund, an SWF, is a state-owned investment fund that manages national savings, often derived from resources like oil, gas, or surplus revenues. These funds typically invest globally in assets ranging from stocks and bonds to real estate, and now, interestingly enough, even cryptocurrencies. Sovereign wealth funds are utilized by countries to diversify their economies, generate stable returns, as well as strategically strengthen their long-term economic power. Now, historically, the US has not ever had a traditional sovereign wealth fund, largely because it's never needed one. The US dollar's global reserve currency status and America's economic dominance, it seemed sufficient enough. However, this narrative dramatically shifted recently. President Trump's announcement of a US sovereign wealth fund underscores a strategic pivot. Trump's vision leverages America's vast public assets, potentially even liquidating underutilized public lands, to create a powerful financial tool designed to compete globally, ensuring long-term economic influence and strategic investment capabilities in emerging sectors like digital assets and blockchain technology. But why exactly launch this fund right now? In short, America recognizes the urgent need to maintain economic competitiveness, specifically against rising financial powerhouses like China as well as the Middle East, whose sovereign wealth funds already dominate the global markets. And by strategically leveraging its own sovereign wealth fund, the United States aims to position itself prominently in crucial future-focused markets, especially crypto, blockchain, AI, and green technologies. Here at JRNY TV, we see this as more than just a financial strategy. It's America's declaration that it intends to remain a global economic superpower for decades to come, positioning crypto investments, including Bitcoin, at the center of this ambitious plan. Perhaps the most intriguing aspect of America's newly announced sovereign wealth fund is its potentially massive impact on global crypto markets, especially Bitcoin. While many of the sovereign wealth funds that have been established traditionally focus on conventional assets like stocks, bonds, and real estate, the US has explicitly signaled intentions to include substantial crypto allocations. This move, it would represent the first major sovereign wealth fund to formally embrace digital assets at scale, sending a powerful message of legitimacy to institutions and investors around the world. Now, let's get practical. What does this actually mean for crypto prices and adoption? Simply put, the US sovereign wealth fund could inject billions of institutional dollars directly into cryptocurrencies like Bitcoin, Ethereum, and other high-potential digital assets. Such massive investment inflows from the world's largest economy, it would almost certainly propel crypto prices upward, stabilizing markets through sustained institutional demand. Moreover, it would encourage other sovereign wealth funds globally, such as Norway's $1.4 trillion fund or Saudi Arabia's $700 billion fund, to seriously consider crypto investments as legitimate diversification tools. However, this institutional influx isn't just about driving prices up. The US sovereign wealth fund's investment investment could fundamentally reshape how cryptocurrencies are viewed worldwide. No longer just speculative bets, but essentially strategic assets with government-backed financial portfolios. This could rapidly accelerate mainstream adoption, regulatory clarity, and global acceptance of crypto as legitimate digital money. At Journey TV, we firmly believe the US sovereign wealth fund's crypto allocation is one of the most bullish catalysts ever to emerge in digital assets. Investors positioned early, recognizing this seismic shift, could be poised for tremendous upside in the years ahead. Why the United States sovereign wealth fund is undoubtedly a game changer for crypto markets. Its impact extends far beyond just financial gains. It could be a powerful geopolitical tool reshaping the global balance of economic power. Historically, sovereign wealth funds have been used by countries like China, Norway, as well as the UAE to exert influence through strategic investments in global markets. Now, with America officially entering the sovereign wealth game, the stakes are higher than ever before, specifically as the fund integrates crypto and digital assets into its long-term strategy. One of the most significant implications of this move is how it positions the United States in relation to economic rivals like China, as well as the European Union. China has aggressively developed its own state-controlled digital currency, the digital yuan, aiming to challenge the dominance of the US dollar in global trade. By leveraging a sovereign wealth fund that holds Bitcoin and other digital assets, the US could counter China's digital currency ambitions, reinforcing the dollar's influence while securing a dominant position in the emerging digital economy. If Bitcoin and crypto become core global reserve assets, America's early sovereign level adoption could be a decisive advantage. However, this also raises serious questions. Will other nations respond by creating their own sovereign wealth funds with heavy crypto exposure? This could spark an economic arms race where global superpowers rush to accumulate Bitcoin and other scarce digital assets. If so, we could see rapid acceleration in Bitcoin scarcity, pushing prices far beyond today's expectations. Here at Journey TV, we see this as an inflection point, the moment where crypto moves from being a niche asset class to becoming an integral component of international finance and power struggles. And for investors that are paying attention, the implications could not be more bullish. One of the biggest unknowns in crypto has always been regulation. For years, investors have navigated a constantly shifting landscape of government policies, SEC crackdowns, and unclear legal frameworks. But with the US now actively creating a sovereign wealth fund that includes crypto, the rules of the game are changing fast. What was once a volatile, very loosely regulated industry is now being integrated into the highest levels of institutional finance, meaning crypto could finally receive the clarity and legitimacy that investors have been demanding for years. The implications of this shift that cannot be overstated. If the United States sovereign wealth fund holds Bitcoin and other digital assets, it essentially forces the government to establish clear, favorable regulations that in fact protect its own financial interests. This could mean a major reduction in legal uncertainty, faster approval of crypto-related ETFs, and even the potential for friendlier tax policies surrounding digital assets. Additionally, once a government-backed fund is holding crypto, it becomes increasingly difficult for regulators like the SEC to continue an aggressive anti-crypto stance. After all, they would be regulating against their own investments. This also sends an incredibly strong signal to institutional investors, many of whom have hesitated to enter the space due to regulatory uncertainties. If the US government itself is investing in Bitcoin, Ethereum, or maybe other digital assets, it gives a huge green light to hedge funds, pension funds, and traditional financial institutions to follow suit. At Journey TV, we believe that this shift could in fact trigger one of the largest institutional adoption waves in crypto that we have ever seen. The combination of regulatory clarity, government-backed legitimacy, and sovereign wealth level investment could all propel crypto into an entirely new era, one where digital assets aren't just an alternative investment, but a foundational component of the global financial system. While the US Sovereign Wealth Fund presents massive opportunities for crypto and global finance alike, it's not without risks and controversies. Critics continue to argue with a government-controlled investment vehicle, especially one with potential exposure to digital assets, it could introduce significant transparency concerns, political interference, and even risks of financial mismanagement. Unlike decentralized cryptocurrencies that operate trustlessly, a sovereign wealth fund is still subject to the decisions of policymakers, and history has in fact shown that government-managed funds do not always prioritize the best interests of the people. One of the biggest red flags that surrounds this fund is how it will be financed. Reports suggest that Trump's administration is considering liquidating portions of public land and other government-owned assets to help generate capital for the fund. This proposal has in fact sparked major major backlash from environmental groups and economic analysts who both worry that selling off national resources to fund investments, specifically in volatile assets like crypto, could be risky. If Bitcoin and other digital assets experience any significant downturn, it would be taxpayers who are ultimately left footing the bill for that bad investment decision made by the government. The implications are significant. Additionally, there's a growing concern about how much influence the government could exert over crypto markets through this fund. If the United States is actively buying, holding, or even selling Bitcoin at scale, this could lead to state-controlled price manipulation. Here's a question. Could the government utilize its holdings to shape policy or enforce economic strategies that serve its own interest at the expense of the retail investors? Well, here at JRNY TV, we believe it's essential to recognize both sides of the coin. Why the United States Sovereign Wealth Fund is a historic financial development, no doubt about it, with bullish implications for crypto. It also raises very serious concerns and questions about centralized control, transparency, and the long-term consequences of government intervention in decentralized markets. So with the US officially entering the sovereign wealth fund game and potentially making one of the largest government-backed crypto moves in history, well, the big question is, how can investors currently position themselves to benefit from this seismic shift? The key takeaway here is the institutional adoption of crypto that's accelerating at an unprecedented rate. Bitcoin, Ethereum, and many other strategic digital assets could in fact see massive price appreciation simply from the influx of capital into the space. Investors who position themselves before these large-scale buy-ins happen could in fact stand to gain significantly. The smartest move for retail investors right now is to align their portfolios with the broader institutional and sovereign wealth trends, tracking which digital assets are being considered by major funds, Bitcoin, Ethereum, and potentially select altcoins tied to infrastructure, tokenized assets, and DeFi. It's crucial. Additionally, keeping a close eye on regulatory shifts and how this sovereign wealth fund will influence crypto-friendly policies could help investors navigate potential tax advantages, new ETFs, or emerging asset classes gaining government support. Understanding the macro level moves institutions are making, it will be critical for those that are looking to ride the next wave. Here at JRNY TV, we firmly believe that we're witnessing a defining moment in financial history, one that cements crypto as a core asset class within the global economy. Whether or not you see the US Sovereign Wealth Fund as a bullish catalyst or a centralized risk factor, one thing is certain. Crypto's legitimacy is reaching all new heights, and those who prepare today will have the best chance to capitalize tomorrow. So stay ahead, stay informed, and always remember, the future belongs to those who start preparing for it today. Until next time, keep learning, keep investing wisely, and stay ahead of that curve with JRNY TV. We'll see you in the next one.